Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 22nd of June. The British pound rebounded yesterday after Bank of England's chief economist Andy Haldane said that he favours a partial withdrawal of the stimulus the Bank of England introduced in August 2016. He added that if data come in broadly as expected in the period ahead, policy tightening is likely to be needed well ahead of current market expectations. The key message we got was that he could support a rate hike at one of the upcoming policy meetings. These comments come in contrast with Governor Carney's remarks on Tuesday that now is not the time to raise rates. This highlights the difference in views among the Monetary Policy Committee and suggests that the committee may be somewhat divided. We would like to focus on, what we would like to focus on, though, is the common ground between these two officials. Both noted that anemic wage growth is the biggest argument against raising rates. As such, we think that moving forward, the main determinant of whether we will see a Bank of England rate hike may be wage and inflation data. We believe that material pickup in domestic inflationary pressures, particularly wages, is needed before the bank decides to act. Euro sterling traded lower on Haldane's hawkish remarks. The pair hit resistance at 0.8840 and slid to find support at 0.8775 before rebounding again. The rate continues to trade above the short-term uptrend line taken from the low of the 10th of May, and thus we consider the near-term outlook of the pair to still be positive. We expect the bulls to aim for another test near 0.8840 soon, where a break could aim for the next resistance of 0.8870. Decisive move above that hurdle would confirm a forthcoming higher high and perhaps open the way for the 0.8945 territory. Now, overnight, the RBNZ kept its policy unchanged, as was widely expected. The tone of the meeting statement was relatively optimistic on the economy, dismissing soft GDP growth in the first quarter as being transitory and indicating that the growth outlook remains positive. With regards to the Kiwi dollar, the bank noted that it has gained around 3% in trade-weighted terms since May, and lower New Zealand dollar would help rebalance the growth outlook. What we found most striking was how soft the bank's language on the currency strength was, given that the last time the Kiwi was trading at similar levels, officials noted that a decline in the exchange rate is needed. We think market participants may have been looking for much stronger hints that the RBNZ wants a weaker Kiwi. In the absence of such signals, the currency gained on the decision. Looking ahead, we think that the outlook of the currency is neutral overall, with the next major indicator that could cause it to assume a direction being CPI data for the second quarter due out in mid-July. That said, we also believe that further upside in the New Zealand dollar may be relatively limited, as a sustained rally could cause the RBNZ to become once again more vocal about wanting a weaker currency. Kiwi dollar traded higher on the less concerned than expected RBNZ. The pair rebounded after it hit support at the lower bound of the short-term triangle it has been trading within since the 6th of June. Nevertheless, the advance was stopped by the upper bound of the formation. Therefore, we would maintain our flat stance for now. That said, we still see the likelihood for the pair to turn down at some point in the not too distant future. We base our view on the fact that the pair has turned sideways after it hit resistance at the downside, the resistance line drawn from the peak of the 8th of November, while our daily momentum indicators have topped near extreme positive levels. Now, as for the rest of today's highlights, during the European Day, the Norges Bank will announce its rate decision, and the forecast is for no change in policy. At its latest gathering, the bank essentially noted that the outlook had not changed much since its March assessment, when it indicated there is a slightly higher probability for a rate cut rather than a rate hike. Ever since, developments have been slightly optimistic on balance. On the bright side, GDP and the unemployment rate were better than the bank's own forecasts. On the downside, the core CPI rate declined by more than the bank anticipated. Having said that, though, the recent decline in NOK argues in favor of higher inflation, so the Norges Bank could incorporate into its forecast a higher inflation path. In this case, we could get a more optimistic tone, considering that the slowdown in inflation is the only dark spot in Norway's economic picture at the moment. Such a tone could support NOK. As for the economic indicators, we get Eurozone's preliminary consumer confidence index for June and Canada's retail sales for April. In the US, initial jobless claims for the week ended on the 16th of June are due out. We have only one speaker on the agenda. Fed Board Governor Jerome Powell will testify before the Senate Banking Committee. Given that the FOMC appears to be divided in two camps, optimistic and cautious, it will be interesting to see where Powell stands. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.